I didn't choose this title for nothing. We're seeing Bitcoin, Ethereum, and the altcoins really going up nicely. Over the past few days, we've also been able to take some really nice profits again. Still, I promise you, this rational video will be incredibly valuable. That's why I'd already appreciate a like and a comment from you. In yesterday's video, I showed you that 80% of crypto Twitter is bearish, and I told you that exactly then you can expect a turnaround and a counter move. And we really got lucky. That's exactly what happened, of course, because of Jerome Powell's speech. But whether all of this is actually as good as it seems, we'll talk about that in a moment. First, I just have to tell you, since Ethereum hit $4,600, we've dropped. $4,100, $4,200 for Ethereum. That's the demand zone. That's where we need to accumulate. And I also showed you here, see this, on August 21st, a setup for Ethereum that we would buy in heavily again in this area. We did that, and with this trade alone, I made over $24,000. All these market updates, these trades, these tips, and so on are all shared in the Trading VIP group. Feel free to join, it's free. You just need to create an account with Weex, but Weex doesn't require KYC. You don't even have to do KYC there. And I'm just mentioning this because, once again, I received a lot of messages yesterday from people saying, hey, thank you so much for the group. I made a lot of money thanks to your Ethereum trade, or I made a lot of money from the trade, so feel free to join and see for yourself. There are no other groups that offer more value for free than we do. As I told you in yesterday's video, this was going to be the most important event in the crypto market, and that's exactly what it was. Yesterday we had Jerome Powell's speech, and he talked about the economy, inflation, and so on. And from this speech you could already gather whether we will see interest rate cuts in the future, because on September 17th we have an FOMC meeting, and there is a 75% chance that we will see rate cuts there, since you could tell from yesterday's speech how Jerome Powell views the whole situation. Normally it was like this, interest rates would only be cut again once inflation drops below 2%. The problem is, however, that we are currently not yet below 2% inflation. That means actually we wouldn't see a rate cut yet. But yesterday we had Jerome Powell's speech, and for once Jerome Powell took a different stance because he said, inflation is important, but this 2% inflation target is not the most important thing we need here. The most important factor for a rate cut is the labor market. And accordingly, they've moved away from this 2% inflation target and are now focusing everything on the labor market. Here, it's very clear. If the labor market is stable, then they can still slowly start to cut interest rates. And that's of course very bullish, because since the rate hikes, we've seen on the Fed balance sheet that capital has been continuously withdrawn from the US economy. They're making money tight to fight inflation. But of course, that doesn't benefit risk assets. Now they want to stop doing that, because we've more or less reached our inflation target and the labor market and everything else is stabilizing a bit, so we'll probably see rate cuts. On the one hand, I'm happy about that, but on the other hand, it also brings a different problem. First, the Fed isn't acting the way they should right now, because originally they only wanted to cut rates when inflation hit 2%. But they've now thrown that overboard. This means that from a global economic perspective, some players might lose a bit of confidence in the Fed as a result. And because they want to cut rates despite rising inflation, as you can see here, they're risking stagflation. And that would mean that a recession also becomes more likely, that the economy stagnates, that things don't go well for the economy. And that could really trigger an even bigger collapse here. So, with this move yesterday, something was created that might be good in the short term, but could be a bit dangerous in the long run. And I don't want to talk this down at all, but we have to stay rational here, and that's what we're doing. Because now we're pricing in interest rate cuts. Very nice. We see the markets are rising really nicely, just the way we want to see it. But friends, when we price something in and then the result comes, it's usually a sell the news event. Take a look at this. Here we had interest rate cuts, a sell the news event. Then we went up until the next meeting. Then here we also had interest rate cuts, again, a sell the news event. You can see that, and that's what I'm expecting now for several reasons. First, September is the worst month for the stock market, and by far the worst month for the crypto market as well, generally speaking. But of course, that doesn't necessarily mean anything. But on September 17th, we're very likely to see the interest rate cut. We're pricing all of that in. That means it's very likely going to be a sell the news event. But if we look at the M2 money supply here, take a look. Here, starting around September 23rd, we reached our high, and since then, we've had a continuous decline. You can see for yourselves how we're following the M2 money supply here, so we're really following it very precisely. And especially around September 17th, when we also see the interest rate cut, we have a bigger crash in the M2 money supply. That means, just based on that fact, we'll probably see a short-term crash. But I really think this will only be a short-term event lasting a few weeks, let's say 2 or 3 weeks, and from there it will probably start rising again. You can see it for yourselves. We're following the M2 money supply exactly. And that's why, in terms of timing, it lines up pretty well that starting from the first interest rate cut, we'll very likely have a sell the news event and see another correction. But don't drive yourselves crazy. It's not going to be a 50% correction, but a drop of 20 to 30% could definitely happen very quickly. But until then, in my opinion, we will continue to rise. I think we could also see a new out of my house, especially since with Bitcoin, there's a lot of liquidity starting at around $119,000. We're definitely going to go after that. That's why I think we'll see another rise in the coming weeks. But then, right around the interest rate cut, we might first get a sell the news event. And I don't want to cause you any panic or anything like that, but let's stay rational. You can take a clear look at this as well. Here we have the 20 EMA and the 50 EMA. We're looking at all of this on a weekly basis for Bitcoin. It gets interesting if we fall below the 20 EMA on the weekly chart. If that happens, we usually test the 50 EMA again and then continue to rise. That's what happened here. Here we fell below, tested the 50 EMA, and from there had a huge breakout. Exactly the same thing here. That's why I'm keeping an eye on this. If we fall below the 20 EMA on the weekly chart, we could easily drop another 15 to 20%, test the 50 EMA, and then see a breakout, because that's how it's been in every grueling phase so far. Take a look at this. Every grueling phase has ended exactly like this, and these are the two things I pay special attention to, because that's how you could predict the next uptrend in the future. But in the short term, as I said, I expect a bit higher highs, and then around September, a smaller crash. 20, 30%, we'll have to see, and then probably toward the end of the year, a really nice phase of euphoria and the big bull run we've been expecting. I'd be extremely interested to hear your opinions on this, and please don't hate or anything just because I say a crash is coming. Please everyone respect that. That's just my opinion. If you have a different opinion, explain to me why you think it should be different. I'm curious and open to discussions.